Good evening, everyone. How is everyone doing? My name is Jeff from Equities. Thank you for joining this webinar that we will talk about unlocking the Singapore market potential for 2023. In this session, everyone is free to ask questions by typing on the chat box. But to avoid disruption, speaker will only address your question at the end of the presentation here. So please let me introduce our speaker today. We are greatly able to invite Christopher Tan, who is a research analyst at EquitiesTracker, where he provides in-depth analysis of the equity markets. He holds a degree in economics and has extensive experience prior to his current role. Christopher has a financial journalist in an established financial weekly magazine in Malaysia. He has passed the Chartered Financial Analyst CFA Level 1 examination and the Module 10 examination on asset and fund management from the Securities Commission of Malaysia. Without further ado, let's all welcome Christopher. Chris, the mic is yours.
All right. Hi. Good evening, Jeff. Can you hear me?
Yeah, loud and clear.
Yeah. Thanks for inviting me, right, Jeff and Gary, and for the investment bank. And good evening, everyone on the audience. Say hi to you, or you can comment in the chat box if we know each other. If you don't know me, my name is Christopher. You can call me Chris. Let me try to share my screen. All right. Hold on. All right, can you guys see my screen?
Yeah, can.
Thank you very much. Yeah, not so familiar with Microsoft Teams because this is my first time to use this team, and I'm actually very honorable to share with all the client of an investment bank. It's my honor to present some of my research and my thoughts on particularly global and Singapore markets.
Hi, Chris.
Hi, Jeff.
The screen went blank.
Oh, went blank. Okay. Let me unshare and share again. Sorry. So do give us some time. We're facing some technical issue. So, okay, I'm trying to share my screen again. Can you guys see my screen?
Yeah, can.
Okay, thank you very much. All right. Once again, thanks for inviting me, and very honorable to be here to share some insight of the market outlook. Okay, tonight's session is going to be a very quick and short session. We will keep it within an hour. I'll try my best. And also, probably if you have any questions, feel free to type in the chat box, right? Okay, before we start, please read this disclaimer as we will show it usually to all our target audience. This is not no stock tip in tonight's session and no buy or sell recommendation. So if you need any advice, please seek from your licensed financial advisor, right? Okay, because this is our first session in investment bank, so we like to just a quick share about who are EquitiesTracker. And actually, we are a listed company in Bursa, Malaysia. We listed in 2019, where we listed in lead market of Bursa. And actually, we have a 46 years in the industry. And by our core business are actually providing financial data and investment education to both retail and industry players in my years. So these are some of the photos in our during our listing journey. And we also train some of the industry players too. These are our clients. Okay, we are our partners also. So our long-term and reputable clientele profile, including M Investment Bank. All right. Okay. Just a quick update on actually who are EquitiesTracker. Actually, besides providing investment education and financial data to all the retailers, and we also recently get license approved by Securities Commission of Malaysia. So we basically walking the talk, and we will doing what we teach people in the class and apply it in the market. Okay, one more thing about our companies. Actually, beside our Malaysian data, we also have this data for Singapore market. You guys can go and check this out. sg.equitiestracker.com. This is totally complete free to use, and yeah, I think this is a very powerful tool to when you try to explore Singapore stock market, right? Basically, we have all the listed company in SGX, past year data, be in profit and loss statement, and all the financial statement we have all there. And also we have a very powerful tool about analyzing REITs, or what we call real estate investment trust in Singapore, right? Please check out, do follow us on our social media. We have Facebook, YouTube, and everything. So if you have time, please constantly update our social media, share some financial investment tips. Tips to build your wealth, not stock tips. All right. Okay. Let's without further ado, let's look at what are the market outlook for 2023, right? As before we actually begin, right, we'll just try to be an engaging session, right? So do you guys have any comment on the stock market for the past two years? So is it how is it doing on your portfolio, green or red? Can you just type in the comment chat box? No, let's have more engaging session. Or maybe it's a no IC kind of situation, people can they say mo ngan kai. Right. Red. Yeah, Yuan Dong. So basically, during the past 1 to 2 years, right? Basically, if you are not losing any money, you are considering very good already for Malaysian market. But if you look at Singapore market, right? Actually, STI actually registered a positive gain during year 2022. I'm not sure how many of you are actually aware that, because I assume most of your investment clients are mostly based in Malaysia, right? But actually, Singapore STI index actually performed pretty well for last year. What are some of the financial institutions in their component stock actually did perform during last year, when all the major economy increased their interest rate, right? So they did really well. So basically, in short, the market are quite challenging for now, and actually, but after post-COVID period, some businesses are seeing recovery in business volume, and whereas there are also other businesses who seeing slower demand due to customer clearing inventories, especially those in you have business in overseas like US and Euro. Those are facing typically people are saying economy are slowing down or recession coming. Hey, but I have to we have to understand this, right? The stock market actually fundamentally the outlook actually depend and influenced by a wide range of factors, including all those economic indicators, and most importantly, corporate earnings, right? And sometimes market sentiment also did impact the how the stock price is going to move, and also some of the monetary policies that influence all the funds moving in or out into the stock market, or all these investment instruments. So I would conclude actually there are both opportunities and headwinds in 2023. So I will share with you guys later, right? Okay, the big question mark is actually recession. So just for the benefit of everyone, so some of you might not in the economics term, right? So what are recession actually? Recession technically in economics theory are saying that actually there are 2 consecutive quarters of negative gross domestic product, right? A GDP, a total national output of the country, we call it GDP. So you have a consecutive 2 quarters of negative GDP growth, which means it's a recession. But sometimes recession also coming along with high unemployment rate. So a lot of people don't get their job. Maybe a plunge in the stock market indexes. Maybe there are also a lot of layoff in the economies. All right, there are a lot of problems in recession. So we'd like to know what are your guys' thought on this year. Are we going to have a recession? Yes or no? Guys can also shout it out in the comment, the chat box. No, no. Yes, no. Thanks, Yuan Tong. So Yuan Tong think there might be a recession. No, there are other guests saying saying no, sure, not sure. Right. In my point of view, just to give you guys some summaries, they are the definition of recession is no exact definition. Even the US previously they already fall into negative 2 quarters of negative GDP growth, right? But now that they are coming back, but they are also twisting their definition, saying that actually their employment market are still very strong. So it's not a recession. Okay, so for our emerging market, we see a more happy news for our emerging market. Mainly, we are less exposed to the end user and demand. Sometimes we also have like Malaysia, we have a very strong private consumption to support our local economies. And okay, let's look at the regional performance of some of the economies in our regions. For Malaysians, or for Singapore, Philippines, Indonesia, and even US, right? We are seeing actually the real GDP growth rate for the 4th quarter of last year actually declined across the board. We are seeing further slowdown in 4th quarter compared to 3rd quarter of last year. So if you look at the Malaysia data, right, we have significantly the growth rate reduced, decelerate from 14.2% to 7%, mainly due to the 3rd quarter, which has a low base effect in year 2021. But if you look at the other market, right, they are considering slowdown, but the decelerate of growth are not so significant compared to Malaysia. For example, if you look at the US 3.2 to 2.9, China 3.9 to 2.9, Singapore 4.2 to 2.2. So all these slower growth are mainly driven or happen in an environment where interest rate has been increased aggressively by the United States, and there are also slower trade activities. All right. Okay. So because tonight's session we're going to talk a little bit more and on the Singapore market, Singapore economies. So I'm sharing this chart actually showing you who are the top trading partners for Singapore. Because just to give you some idea, actually Singapore, the population are quite small, 5.6 million population, and their economy are actually very open, even more open than Malaysia, right? What I mean by open, they are more reliant on export and import of goods. So their trading volume are actually, their total trade are 3 times than their annual GDP. All right. So they are very exposed to all this global demand and supply situation. So if you want to try to understand that, if you ask me to forecast what Singapore going forward going to be, you can first look at how their trading partners are doing, right? So their largest customer, I would say, all right, the largest trading partner actually in China, followed by Malaysia and United States. So we can have a look on what are all these countries like China, Malaysia, and United States are doing, and then we can have a sense on how Singapore market are going to do, whether it do well or no, face more headwinds ahead For China GDP growth, we know that actually for past 1 year, China has already they have their zero COVID policy, which complete lockdown. For example, when people got COVID in a building, they shut down, they lock down the whole buildings for so many months. In Beijing or Shanghai, there are massive lockdown in China. So even that they still registered risk, I would say, pretty healthy growth rate for the economy. So they are still growing. And the last quarter of last year, they actually grew at 2.9%. Right. Okay. And for the outlook for China economy, right? Just to give you guys information on what is their government's forecast for the growth for year 2023. Actually, the official figures haven't released by the Chinese government, but I think there are also some announcement that their president Xi Jinping going to set the announcement on March, right? Because there will be the annual parliamentary meetings. So wait for it for the latest figure. But overall, the economy grew by 3% in year 2022. So for Malaysia, the second largest trading partner, for our economy, the last quarter we grew at 7%, slowed down from 14%, and whole year we grew at 8.7%, right? So for Malaysian market, for our GDP growth are still above the long-term average of 5.1%, and our central bank, Bank Negara Malaysia, are still forecasting that year 2023 going to be at a 4 to 5% kind of growth, and definitely there will be no recession. And US, the third largest trading partner, I would say US economy, right? Because they are I would say advanced economy or developed countries, right? So basically their growth rate was slightly lower than our countries like Malaysia or Singapore. So they registered 2.9% on the last quarter of last year, right? For Singapore market, because as I said just now, right, they are a countries with focus on the transshipment. So if you look at their port, Singapore have a massive port with highest efficiency in the region, or even globally one of the top well-managed port facilities. So I think during year 2021, there are a huge jump in the shipping cost or the containers price, right? So coming into year 2022 and 2023, the World Container Index are actually dropped from the more than I would say more than 9,000 at the beginning of last year to currently less than $2,000 per 40-footer container. So I would say this is quite a good news, or definitely a well-received kind of situation for all these be it exporter or transshipment countries like Singapore. Right. I would like to bring you guys to the other perspective. Like this is the one of the big events that happened in year 2022 and 2023, which is a tech companies laying off in the United States, right? I would say medias are playing a very negative headline in the job cut, saying that which company are cutting 100% of their workforce. So because of their fear of recession and trim down their employees. So if you look at the chart, actually the number of employees that have been laid off actually skyrocketed, right, from the first half of year 2022, compared to second half, and even 2023. So being one of the major trading partner in US is being one of the major trading partner for Singapore. Some of the this kind of sentiment definitely will slightly impact all these media are saying they're very negative headlines, right? But these are one of the employment data in US. Like I said, besides tech company, which is they already grew quite fast during a post-COVID period, like year 2021, they're actually, the overall job market are still quite strong for the United States. So if I extract this chart from Yahoo Finance, right, this explains very well that actually the headlines that are catching your eyeballs, right, very negative headlines about the job cuts are actually still are not severe as you think. Because if you look at the chart, right, in the chart, the bar chart in the purple color is actually the headcount growth for all these tech giant post-pandemic. For example, if you look at the Meta, or previously we call it Facebook, right, they grew their headcount by 94.3% post-pandemic, because they are during lockdown period, everybody are using online meeting, right? So Google, Microsoft, everything, all these tech giants are constantly hiring more headcounts and more staff. And currently, the recent layoff they announced are just trying to do some restructuring on their the whole organization. So Meta are actually only cutting 12.6% of their workforce. So this is, I think we should look at things in both perspectives, instead of the headline that catching your eyeballs, right? Okay. In short, what are the IMF are looking at for the overall outlook for year 2023? If you look at the chart on the left, right, there is a global economy going to are growing at 3.4% in year 2022, whereas going to have a slow down to from 3.4 to 2.9% in year 2023, and we again going to accelerate in year 2024 to 3.1%. So what are the main reasons that driven the growth down is actually on the chart in the middle is actually the advanced economies. So they're going to have a slower growth in year 2023 this year, and then further accelerate next year. But for emerging market like Singapore, we are still having a very consistent kind of GDP growth based on our IMF forecast, right? Okay, so basically this slide are showing that the overall economic outlook by region. So they are advanced economy like US, Euro, definitely going to have a quite significant impact in all this advanced economy. Against emerging market, you're seeing that 4.3 to 5.3% jump for the growth projection. All right, I find this chart very quite interesting chart because it's very easy to understand, and you will try to guess, right? Actually, where are we at now? This is the economic cycle or investment clock. Normally, when the clock turning down, right, from 12 o'clock to 6 o'clock, there are slowdown or even recession, and when the needle's going up, actually from 6 to 12, we're actually in the recovery phase and boom in our economy. So can you guys guess where are we at now? Definitely we are not in the left side of the clock, right? Based on our current sentiment. So my guess, probably we are at the 5 o'clock now, tighter money, right? Because we already seen falling commodity price, be it crude oil prices and crude palm oil prices. All these commodity prices are falling, and falling obviously reserve and tighter money. So I explain what are the tighter monies that what I actually mean by tighter monies, right? Because during COVID time, US or be the world largest economies, they're actually printing the highest amount of money, basically the helicopter money, all right? So to try to save the economy due to, they're saying the COVID, impact from COVID. But what they're actually doing, they're actually putting too much liquidity into the economies and causing inflation and causing all these they say all inflation are transitory, but unfortunately they are not, and the inflation are still now lingering around in all these major economies. So currently they are trying to further increase the interest rate, to cut off some of the liquidity to take off some of the liquidity in the market. That's why causing, a lot of people, their portfolio are suffering, even like the stock market and the industry. But if you look at very closely, if we really at a number 5, number 6 kind of level, 5 o'clock to 6 o'clock, right? We are not too far, or I would say not too far from recovery phase, or maybe the worst sometimes is getting over. Okay, so let's go back to the long-term GDP growth of Singapore. Now in year 2022, Singapore GDP actually is at Sing dollar of 643.5 billion. All right, it's about I would say slightly higher than Malaysia GDP in ringgit terms, but despite they are much for only 1/5 of our population, only 5 million, right, compared to our 30 over million. So definitely their income, the GDP per capita is much higher. So the company, not company, sorry, the country is actually growing at 3.6% in terms of real GDP growth. But if you look at the long-term chart for our neighbor down south, right, I would say their GDP growth actually quite impressive throughout the years. If you calculate, right, the GDP growth rate, the GDP growth at a compound annual growth rate of about 5.6%, right? 5.6%. I would say it's quite a good figures for Singapore without any natural resources and a country where their GDP are still even staying pretty well in the as a economy that's very open, but they control the COVID quite well. Okay, so one thing I can one of the key measures that I'm trying to say is, if you look at the long-term growth for our GDP of Singapore, there's definitely a long-term uptrend. So I wouldn't say, if you ask me what going to be the talking about the Singapore stock market performance for like STI index, actually I doesn't know their index going to be at the end of the year. But however, if you're putting a very longer term perspective, right, for Singapore economy going to be double their production and double their GDP in the next 10 to 15 years. I know their STI index will also double in the corresponding period, right, for the next 10 to 15 years. So the key message I'm trying to say is actually, so regardless of the headwinds in the global landscape, like advanced economy, be it, will there be a recession for this year or next year, which I don't think likely to happen. But even like all these black swan event happen, right, the long-term outlook for countries are still very much intact. Because if we study what the structure of their economies, right, their economy are actually, I would say 70% are service-based, and only 25% is an industrial or manufacturing-based kind of economy. So they are very fast service country, right? And they actually did transform and try to reduce their exposure for manufacturing for so many years. So they actually are successful to reduce their exposure to manufacturing sector contribution from 25% of their overall economies to about 20% or 21% in the year 2022, right? And about the economy, although currently is one of the largest sector is still manufacturing, but the rest are actually all service-based kind of industry, which is more, I would say, in terms of the recurring kind of revenue or recurring kind of income for the countries like finance, industry are very significant to the economy. It's very, I would say, the industry will bodes well for the next decade and going forward. So if you can see, there's a wholesale trade contribute about 18.6% of the economy. And of course, transportation and storage is one of the key economies contributor to Singapore. Okay, and also IT, finance and insurance, 13.5%, and professional services. And so for those like construction, only less than 3% of the economy contribution, real estate 2.9%, and there's others like other services industry. So all these like only manufacturing and manufacturing based. I would say mostly they are still service oriented countries, right? Outward oriented, where financial service act as a global hub in the region. So all these like US companies, they're going to set up their global hubs in Singapore. And in terms of population, yeah, the data is here. They have 5.6 million of population, 3.4% growth over previous year. Yeah, they are still growing. I think, yeah. Okay, this is one of the chart they're actually showing comparison between ringgit, Malaysia, and Singapore dollar. Okay, why I'm showing this chart is actually basically for Malaysian investors. If you think about it, right, if you only invest in Malaysian market, although you are making money, for example, 10% or 20% in the last few years, but in terms of the spending power overseas, right, if you go to visit some of the countries, your spending power really has been impacted by the currency movement of our ringgit Malaysia. So, but if you look at the chart, right, basically showing that it's a rebase chart. We're putting two currencies. The currency in blue color is actually ringgit Malaysia versus US dollar, where the line in red is actually Sing dollar versus US dollar. So you can see the blue line actually going up and the red line are coming down, where going up is actually basically your currency depreciated, right, by 64% compared to 1990s. Whereas Singapore dollars are actually strengthened against US dollar by 29%. So for example, if you are without doing anything in 1990s, you're shipping your ringgit, put it into Singapore dollars, you are making a 90% kind of return without doing anything, right? Just from the currency exchange point of view. So there's no good or bad thing. I would say a strong currency has the benefit of strong currency and also have the weakness of a strong currency. Weak currency also have a benefit, like you have a high export volume, they are also good or bad. Okay, so if you look deep dive on what are some of the reasons that actually Singapore enjoy stronger currencies movement compared to Malaysia, I would say one of the reasons you can look at is going to study their money supply. So if you know that actually basic economics, right, if you print more money, your currency going to be more depreciated over the time, right? Your money become smaller and smaller lah, basically in a layman term. So for Singapore M2 money supply is one of the category of the the currency issued by Singapore Central Bank, right? That the currency actually growing at a compound annual growth rate of 6.7%, right? The overall money supply in the economies has growing at 6.7% per annum from year 2000 to year 2022. So if you just try to give you a sense to compare, right? Actually, Malaysia are actually growing our currency at a higher rate of compound growth rate. Although only 3%, but if you are looking in terms of the the currencies, we have less than 500 billion currency in year 2000 compared to we have 2.3 trillion. We're printing at every year constantly we print 9.2% more currency than previous year. This is the meaning. So I would say this is one of the reasons that we have our ringgit are actually weaker compared to Singapore. Right. So interest rate. If you look at the interest rate, right, all the investor or the fund manager in the world, right, we're looking at the one of the key interest rate, which is the US Federal Fund Rate. So for US, actually they are consistently increase in their Federal Fund Rate. Throughout the whole last year, they increased by 7 to 8 times, and consistently 3 times increased by 75 basis points. So they suck up much of the liquidity from the market by increased interest rate at a speed that you've never seen before. So recently in February, they also increased by another 25 basis points. And that's why, for this year, they also published some of the outlook from Federal Reserve, right? That actually they're trying to, have further rate hike going ahead. So if you compare US inflation rate and the interest rate, right? The interest rate actually, you can consider this one as a risk-free rate. Basically, you put in the money in the bank without taking any risk. You can easily make a 4.75% of interest per annum, right? So the higher the risk-free rate, definitely going to impact your asset prices, like your stock prices or commodity prices. So increasing interest rate is bad for all these commodities and all the asset classes. So basically, one of the main reasons that US increased their interest rate is try to tame the inflation and try to lower down their inflation rate, because they are seeing a peak of 9.1% of inflation rate in June last year. So they try to bring it down to a long-term average of 2%. So a further rate hike most likely to happen this year. And there are some of the guidelines published by Federal Reserve of United States, right? There are a few people sitting in the board of Federal Funds, Federal Reserve, and they also have all this projection by the economies, right? So they project the US going to have a Federal Fund rate of 5.1% for year 2023. Is a 70 basis point higher than year 2022. So it is actually, if you remember, last year 2022 is actually increased from 0 to 4.5, right? Is a 4.5% increase. It's a very significant increase. So this year, I would think the overall stock market will benefit from slower rate hike. Okay, the decision by our Federal Fund Rate. If the Federal Fund Rate follow their forecast, right, there will be 70 basis point increase in their interest rate. So next year, the result for next year, they are saying that they're going to be a cut in interest rate. So again, right, when the interest rate increase, your stock prices will go down, and vice versa. So what will happen if the interest rate actually coming down? It's actually showing that there could be a potential increase in your asset prices, right? Okay. So basically, this chart is saying that how many cash in US bank, all the commercial bank in the US, how many cash they have in their balance sheet, right? So the ultimate question we're going to ask, are there any recession in year 2023? Because we are seeing that the federal fund, cutting their interest rate forecast in year 2024 by 100 basis points. So which means they imply there's a certain recession risk in the economy. So I would say, if you look at the chart, right, the cash in all the commercial banks in the United States, I will classify a recession or as recession happen when there's a liquidity crunch, no liquidity in the market. But in the banks in the United States, right, there are still ample of liquidity in all the commercial banks. They have about 3 billion of cash in their banks. So if the bank can successfully lend out all this money and all these consumers are not taking up loans, actually there wouldn't be any liquidity crunch in the economy. So the risk for a recession is very much quite low, in my opinion. Okay. Okay. Talking so much about macro things, right? So I'm just showing some of the simple slide that if you compare some of the companies in Bursa Malaysia and Singapore Stock Exchange. This is not a stock and buy recommendation. I must emphasize this. Just some example to show you guys what are the valuation they are trading at. All right, based on what are the largest market cap in their particular sector, like tech-related companies in both exchanges. So on the left is some of the companies that listed in Bursa Malaysia, like Inari, Vitrox, MPI. Their earnings yield, basically earnings yield you can consider this is a yield for investor, or I would say most of people are familiar more with a PE. So earnings yield actually is an inverted PE, right? So earnings yield, you can use the earnings yield to compare against the risk-free rate. All right. So currently, some of the companies in Malaysia that are trading like for tech-related companies, right? They are trading at 4.23%, 2.74%, and even 3% each kind of level, right? So basically, if you cross the border and you invest in some of the tech-related companies or semiconductor-related companies, which is they are also have their business like in Malaysia, and they are serving also all the MNCs, right? They are also very even some of their machineries are even more high-end compared to our Malaysian player. They sit at a higher valuation level, yet their earnings yields are higher compared to Malaysia. So ventures, AMs and UMS, some of the semiconductor equipment manufacturers are trading at 14.31%, right? It's AM, right? The one with highest earnings yields in the technology sector in Singapore Stock Exchange. So if you like to study more about Singapore Stock Exchange, you can go to Singapore SGX.com to find out. There's a lot of information, and there are players who serving MNCs they are even have some players that actually supplying their parts or their products to like ASML or all these global giant front-end equipment players, right? There are lots. So you can, if you have time, to check out. We also, if we have the chance, right, I would have to share like next session or next few sessions to share with you in more detail on some of the industry or some of the companies even, if we have the chance to share, right? But tonight we only have 1 hour session, including Q&A, so we wouldn't go into detail and deep dive in all these companies, right? Just to give you some more on a macro kind of picture for tonight's session lah. Right, these are some of the sharing on our website. If you have time, do check out our sg.equitystracker.com. We actually using our we generate data using our artificial intelligence AI kind of ideas. We sort it out what are the companies that in Singapore actually fulfill certain criteria, like we call it rising star. So it's not buy and sell recommendation again. It's all driven by computer formula, right? Rising star, they are the companies that actually fulfill some of the criteria, like they continuously grow their net profit over last 3 to 5 years, right? So you can say that there are certain companies that in the industry actually perform very well. There might be some of the can find out some what are the similarities or common characteristics in the industry that actually will perform very well going forward, also based on the past 3 to 5 years data. All right, there are also dividend kings. I know some of you guys like dividends, especially those guys need a consistent cash flow, right? There are a lot of companies that are actually providing very high dividends to the investor. So we also sorted out and filter all this, what are the companies that are consistently generating a positive operating cash flow, because we think that the cash flow is the only the sustainable way to pay dividends instead of like borrowings, right? So those are companies who have generated positive cash flow for the last 5 years, and also they're generous in paying dividends, are also in the list. Some of the moat defender, the company that has a wide economic moat and like posting a profit margin of over 20 to 30%. There are even higher companies that generate more than 50% kind of margin in Singapore Stock Exchange, yet trading at a very attractive and interesting kind of valuation. And also there are cash holders, because we know during COVID time, right, business are having zero sales, they can't do their business. So basically the cash is king, and cash also can be used to acquire other business to do M&A. So what are the companies that have all the cash in their balance sheet? They can easily ride through all the economic storm. So you can check out the list also. And there are also continuous hero, like they are posting uninterrupted profit, dividends, and operating cash flow for 10 years or more. So there are a lot of filters in our sg.equitystracker.com, and I must emphasize this once again, it is completely free, okay, free of charge. So if you guys have time and try to explore about more on the Singapore stocks, right, please check out the website. We actually posted a QR code here, so you can use your smartphone to scan the QR code, right, or you type in the link https://sg.equitystracker.com, right, go to find out. All right, I think this will be my last slide. I will say thank you very much. If you have any question, I'm very happy to answer your question.
Hi everyone. Any question for Chris?
Yeah, we have 10 minutes more to answer any questions. I'll try my best to answer all your questions. Or if without any questions, right, I will just try to share our website like sg.equitytracker.com to show you guys what it looks like and what are the features. Can we do that while waiting the questions, Jeff?
Sure.
All right. Can you see the website? Okay, I hope you guys can see my screen, right? And basically, this is our sg.equitytracker.com. You can search your stock here. Click search stock. We have a 𝐂𝐡𝐫𝐢𝐬𝐭𝐨𝐩 if you are interested in real estate investment trust that provide constantly high dividends to the shareholders, right? You might check this out on the REIT Gurus. All right, let's say we click on REIT Guru. You even can compare, right? And select the best REIT for portfolio that suits your investment appetite, because there are multiple kind of REITs. There are hospitality REITs, there are commercial REITs, they are shopping mall REITs, industrial REITs, there are even data center REITs. There are so many REITs. So you can select a REIT and click on compare. So yeah, you can see all their figures in single page and what they're doing, what is their net lettable area. I would say you can click and search and find your ideal REITs to invest in, right? So it's a very great place to do your homework using this website. Yeah, and there are also some of the ideas in using our computer algorithms to generate all these ideas, like Rising Star, Dividend King, right? As I mentioned, there are a lot of companies. So, okay, for this page, Rising Star, we have more than 130 companies that have posted a jump in their 3 years net profit, right? You can examine their growth. For example, the first company that 𝐂𝐡𝐫𝐢𝐬𝐭𝐨𝐩 Holdings Limited, I would say this is a real estate and development company. You can easily tell the company is in which sector, right? If you dig further, you can click on the company or do some research. Actually, I would say this is a company, Uniqlo. Everybody know Uniqlo, right? Uniqlo Malaysia, Singapore. They are the owner of Uniqlo Malaysia and Singapore, and also they are doing some of the real estate development and operations, right? But they are doing JV lah, so they JV with Singapore companies called Fast Retailing, the ultimate owner of Uniqlo. So they are not the only owner of Uniqlo Malaysia, right? So you can search all this stock. I hope this will be a great tool for you, and do have some time to explore the website, right?
Yeah, also it's free for everyone. Please notice.
Yeah, it's completely free, right? Without any single charge. So if you go to the similar website, or like you subscribe for Bloomberg, right, this will cost you a bomb. So, right.
Just to let you all know that there will be the additional more and more features inside. So maybe in the future, EquitiesTracker may charge some fees to log in. So please enjoy it while it's complimentary.
Yeah. So.
Okay, the first question come in is from Yuan Tong. Is the SG market is active market than Malaysia market?
All right, it depends, right? It depends on what kind of stock you're looking at. So I would say if you look at their top volume list, right, there were certain banks there are structural warrants involved. So they are also quite active, right? So if you're in the stock market for long enough, right, you will know that actually there are also people are always saying that I have a misconception on Singapore stock is lack of volume, right? Some people might say that, but I would say it depends. So it depends on what kind of stock you're looking at.
Okay, next question is from Robert. ET Singapore side is different login from ET MY. Yes, I believe it's different, right?
You can access from ET's Malaysia website. We have a SG logo at the top of the website, or you can just type it in sg.equitiestracker.com. Yeah, thanks, Robert.
Now, another question from Yuan Tong is comparing SG Bank versus Malaysia Bank, SG REIT versus Malaysia REIT, which are much attractive?
Which are more attractive, right? I would say they are quite different kind of animals. In terms of valuation, if you look at the, I would say one of the very important metrics that when you invest in financial institutions like banks, right, they are like price to book value ratio you can look at. All right, there are certain banks trading at very cheaper valuation in Malaysia stock exchange. However, you also have to consider the asset quality, right? So what I'm trying to say that although there are certain banks in Malaysia trading at lower valuation in terms of price to book value, but also you have to consider the asset quality also lah. So overall, there are top three banks in Singapore Stock Exchange. They are DBS, OCBC, and UOB banks. They are top three largest banks in Singapore Stock Exchange. So I would say they are very well managed banks. So that's why there are certain valuation. I would say they are slightly higher compared to Malaysia's peers in terms of price to book value. So,
hey guys, any more question? I see there are no more questions right now. So, all right, thank you everyone for staying until the end of the session. And thanks, Chris, for sharing your valuable knowledge with the audience. If you wish to get the research report update for your future event info, please join our Telegram channel. We would like to wish everybody good evening and have a good rest and happy investing. Thanks, Chris. See you all at the future event.
Thank you, Jay.
Thank you, everyone.
See you guys. Thanks. Bye.
Bye.